What's up, TG team? This is Ruben from TGE, and today's talk is about someone who has a $30,000 account. They have some wins, but they struggle with consistency. Okay, so let's start with the email. I said many traders blame emotions in trading strategy, but the real culprit is inconsistent position sizing. This is something that's true. When I used to run a software tool for trading, a trading journal software tool, and I'm not, the majority of folks, the data when I was analyzing data, they were going into position sizes of like, let's say they have a $40,000 account, they would go in with a $20,000 position size, zero DTE, and then they would lose that, and then the next trade they would go in like $1,000. It just very inconsistent, very like it would just it would just go to zero pretty much. They would blow their account, and then they would blame the trading strategy and their emotions. It's not that; it's that you just didn't do the math right about your risk management. That's it. So position sizing is very, very important. When I first started learning about proper risk management, it was some dude on Twitter. I he was like he just pointed out position sizing is the thing that we can control, and I was like, oh, that makes a lot of sense. I can survive if I position correctly, and that kind of took a little mind shift, a different mind shift, because I had to like be less greedy, right? Because I had to size down less. So I wish that most folks actually had the problem of like undersizing rather than oversizing. But let's get into this. I've seen traders with solid strategies struggle simply because they don't have a structured approach to how much capital they are allowed to allocate per trade. So this is really, really important, right? Most of the time, traders, and probably yourself if you're looking at this, you don't have a strategy problem. If anything, probably a high win rate strategy. And a high win rate strategy is like 40% or above. Okay, you can always improve on win rate, but that's a pretty good win rate. And I have a TG Max member who, the month of January, they started with a small account because I make them all go through small accounts to make sure that they're executing to a T. He had a 40% win rate, and he came out on the small account 20% P&L increase, and that's just one contract. I think I forgot how many losses we had for him, but he had a 40% win rate, and he was very profitable for that month for the small account. So that's really, really good. Okay, you don't need a high win rate to be profitable. It's just sizing that's the problem, and the strategy that we use is very, very low risk, high reward. Very, very low risk. I said one day they all one day they all in with $20,000 positions. The next they're in with a $500 trade, and the result is wild P&L swings, emotional roller coaster ride, and predictable and a oh I misspelled that. That was supposed to be and a unpredictable equity curve. Oh, sorry, a predictable equity curve to the downside. Yeah, so like most of the time they would just go nosedive. Okay, how to get consistent outcomes. This is really important. At TG Max, I teach traders to follow a 1 to 3 risk reward model. This makes sure that our 30% win rate, that we can, even at a 30% win rate, we can break even. And with our 50 to 60% win rate, then we're definitely consistently profitable month over month. So this is very, very important. You got to figure out this math. Okay, this math is really, really important. When you have a 30% win rate and you can still break even, it takes a lot of stress off of you. You don't have to like be like, oh, I have to win every single trade. You don't have to, okay? Just make sure you have a good risk reward model. All right. One of our members completed his first month. Yeah, this is what I was just saying. With a win rate below 40%, yet still ended the month 20% positive. I should have put a screenshot in here. Here's how you can implement it yourself. No single trade should be more than 1 to 2% of your total capital. Very, very important. Okay. If I tell my TG Max members I'm going in 2 to 3%, I feel very, very confident about this trade. And I'm not going like 2, 3% on a short expiration. That's usually like a leap trade or maybe even shares. But like it's nothing like I'm not going in 10%. I think a lot of traders on Twitter were like, go with 8%, no more than 10%. That doesn't work. All right. It's about having enough swings. Your position size variance should stay within 5% of your trade. Okay, so this goes back to like this thing that I was saying. Like if you take a trade that's $1,000, okay, the deviation should be 5% above or below that thousand. So like what is 5%? Like maybe 1,050 or $950. Stay consistent. Okay, very, very important. When you start deviating more than 5%, you're gonna get some really random results. Now, here's how much capital you can allocate per volatility, VIX. So I gave an example here. Like when the VIX is between 10 to 15, I like to allocate a max of 25% of my total capital in the market. When the VIX is between 15 to 20, I like to allocate about 30% max. Okay, it doesn't mean I have to be there, but it's the max that I can allocate. VIX between 20 to 30 is about 35%, and VIX 30 to 40 is about 40%. Okay, so then I give you an example here. Let's do a $30,000 account size. If the VIX is at 16, that means 30% max allocation. So I can only allocate a max of $9,000. Since TG Max members traders take on average 24 trades per month, that's typically our average amount of trades per month. We divide that 9,000 across those trades. Okay, so we divide 9,000 divided by 24, and we can put about $375 per trade. $375 divided by 30,000 is about 1.25% of our account size. Okay, do you see how I say this in all the videos, like use math, and it's not just for finding opportunities, but also for risk management. Very, very important. You got to use math. So if you hate math, you're not going to do very well. This makes sure that when trades don't go our way, our losses stay controlled while compounding our winners over time. Look, price is unpredictable, market moves are random, but position sizing is 100% in our control. If you nail that part, you'll save money, stabilize your results, and build long-term consistency. And then I say, if you wanna learn the trading strategy, you could get it for free inside our community. And it's really that simple, okay? It's the only thing that you can control. Like, you have some wins but struggle with consistency. And usually what's inconsistent is position sizing. So when you have that down, you won't see inconsistency. You'll have a consistent equity curve going to the upside, okay? But you have to do the math on how much you can allocate per trade, all right? So that's it for this video. If you found it helpful, if you want to join the TG free community, there's a link down there. If you want to work with me and you want step-by-step guidance and you want to use our tools and all that stuff, I'll put a link on there too. All right, peace out.